Subscribe to my channel Report Stock.
Okay, imagine this. A company isn't just doing well, it's absolutely smashing record financial results. And this is happening in a market you could, well, generously call dynamic.
Yeah, that's putting it mildly. It's more than just a good quarter. It's like a textbook example of smart positioning.
Exactly. So today we're doing a deep dive into Franco-Nevada Corporation. We're going to unpack their Q2 2025 financials, which were, frankly, pretty stunning.
And for anyone maybe not super familiar, Franco-Nevada, they're a big player in gold-focused royalty and streaming. Their whole business model is different. They give capital to miners, and in return, they get a slice of future revenue or production.
Right. So you get exposure to gold prices, maybe some exploration upside, but crucially, you're sort of shielded from the rising costs of actually running the mine day to day, which is a huge deal right now. They trade as FNV, by the way, TSX and NYSE.
Important detail.
So our mission today is pretty clear. We're not just going to read numbers off a page. We want to get underneath this report, figure out what exactly drove these record highs.
What strategies worked, what market forces were at play.
Yeah, and what it all means, really, for mining, maybe even for the wider economy. So let's start with the big picture. Just how good were these numbers?
Okay, let's lay it out. The revenue numbers alone are pretty eye-watering.
So Q2 2025 revenue, a record $369.4 million. That's up 42% from Q2 last year. 42%.
And it's not just one quarter. First half of 2025, $737.8 million. That's up 43% compared to the first half of 2024. These are significant jumps, not just small ticks upwards.
Okay, and how did that filter down the cash flow profit?
Well, that's where it gets even more dramatic, really. Operating cash flow also hit records, $430.3 million in Q2. That's up 121% year over year.
Wow, 121%.
Yeah. And the first half number, $719.2 million. That's up 93%. Then you've got adjusted EBITDA, another record, $365.7 million in Q2, up 65%. And net income, well, that just exploded, $247.1 million, up 211%. These aren't minor adjustments, like you said.
Okay, all right, so huge numbers. But here's where it gets kind of fascinating and maybe a bit counterintuitive for some folks. Let's talk GEOs. Gold equivalent ounces.
Right. So GEOs, that's basically their share of production from all their different assets, mining, energy, all converted into what it would be worth in gold.
Exactly. So with revenue and profit dumping like that, you'd think GEO's soul must have gone through the roof too, right?
You would think so. But here's the twist.
The twist is GEOs sold only increased slightly, just 2%, to 112,093 GEOs in Q2. So how does that work? Massive revenue jump, tiny GEO increase.
Okay, this really gets to the heart of their model and how they benefit from market moves. It boils down to the gold price. Gold just massively outperformed other commodities in that period.
Oh, okay.
The average gold price jumped from $2,338 an ounce in Q2 2024 to $3,279 in Q2 2025, a huge increase.
Right.
So when they convert the value of their non-gold streams like silver or energy or whatever back into a gold equivalent ounce, because gold is suddenly worth so much more relatively, those other commodities actually translate into fewer GEOs.
Huh. So the strong gold price actually reduced the reported GEOs from their diversified stuff.
Exactly. It sounds weird, but yeah. It means their financial results disproportionately benefit from a rising gold price, even if the physical volume of stuff coming out of the ground isn't changing dramatically. They get the upside without the direct mining cost inflation.
That's the magic sauce, isn't it? It really shows the leverage in this model.
It's incredible leverage. And that's why these financial numbers are so staggering, even with relatively flat production volumes in GEO terms.
So for you listening, this is a prime example of how strategic positioning, especially in gold, can lead to these really outsized financial gains. It's less about digging more about owning smart.
Couldn't have said it better.
Okay, so beyond just one amazing quarter, Franco-Nevada is clearly playing the long game. You see it in their acquisitions, the strength of their portfolio. Let's talk about that diversification.
Yeah, that's fundamental to them. Huge diversity. Not just what they have interests in metals, energy, but also who operates the mines and where they are globally.
They talk about this mix of long life streams and high optionality royalties. How did the revenue break down in Q2?
Okay, so Q2 revenue, heavily weighted to precious metals, 82%. Within that, 70% was gold, 10% silver, 2% PGMs, platinum group metals.
Right.
Then you had energy at 14% and iron ore and other stuff making up the last 4%. And geographically,
Where's money coming from?
Mostly the Americas, 86% of total revenue, and it's spread out pretty well, 38% from South America, 12% Central America and Mexico, 20% Canada, 16% US.
That spread is key, isn't it? Reduces risk if one region hits a snag.
Absolutely central to their resilience. It spreads the risk across different political climates, different operating environments, different commodities.
Okay, shifting gears a bit, let's talk about those strategic moves. What recent acquisitions really jumped out at you as, setting them up for future growth?
Well, the Côté Gold Mine royalty, that's definitely a big one. They picked that up June 24th, 2025. Cost them $1,050 million. Yeah, big ticket. It's a 7.5% gross margin royalty on one of Canada's newest big gold mines, operated by IM Gold and Sumitomo, and it has this interesting buy-down option for the operators, too. Significant investment in a major Canadian project.
And they didn't just stop there, did they? What else happened recently, maybe even after the quarter ended?
No, they kept going. Post-quarter, July 23rd, they grabbed a 1.0% NSR, that's net smelter return, on AngloGold Ashanti's Arthur Gold project. Cost $250 million cash, plus maybe another $25 million down the line.
And the Arthur project, that's kind of a big deal.
Oh, yeah. It's one of the biggest gold discoveries in Nevada recently, so very strategic. And even before that, July 11th, they added another piece of the Gold Quarry gold mine royalty, another 1.62% NSR for about $10.5 million, plus a potential extra million. That brings their total stake there to almost 9% NSR.
Okay, so Côté, Arthur, Gold Quarry. What about the Porcupine Complex? That was another big financing deal, wasn't it?
That's right. Back on April 15th, they put together this pretty hefty $448.6 million package with Discovery Silver. It's got a few parts. A 4.25% SR for $300 million, a $100 million loan, and about $48.6 million in equity.
So you look at all these deals together, Côté, Arthur, Porcupine, plus growth from existing stuff like Tucunzinho. Is that where the higher GEOs are expected to come from later this year?
That's exactly the expectation. These are the main drivers anticipated for the second half of 2025. It really shows their core strategy, right? Use that strong balance sheet. They had, what, $1.1 billion in available capital at the end of June?
Yeah, $1.1 billion.
Use that cash to buy these high-potential, long-life assets. So for you, the listener, this translates to securing future growth and making that diversified portfolio even stronger. It's about actively building value over time.
Okay, but it's not always smooth sailing. Every company hits bumps. For Franco-Nevada, a big one has been Cobre Panama. Big copper asset, production halted since late 2023, right? It's in this sort of preservation mode.
Yeah, preservation and safe management, PNSM they call it. It's been a significant challenge, no doubt. Yeah. But what's really interesting is the recent news there. It's actually been quite constructive.
Oh, how so?
Well, on May 30th, the government of Panama actually approved the PNSM plan. And the crucial part, that approval included letting them ship out about 121,000 tons of copper concentrate that was just sitting there, stored at the site since the shutdown.
Yeah, so they could sell the inventory.
Exactly. And the report says those shipments are now done, completed successfully.
So even with the mine not actually producing new ore, they managed to generate some value. That's pretty clever, actually. What does that mean for Franco-Nevada's numbers?
It's actually quite significant. Because of that concentrate sale, Franco-Nevada expects to get around 10,000 GEOs in Q3. That's mostly gold, about 9,000 ounces, plus 105,000 ounces of silver.
From an asset that's technically shut down.
Right. From material that was already there.
Yeah.
And this actually led them to reverse part of an earlier impairment charge, about $4.1 million, back in Q2.
And I also saw something about them suspending arbitration against the Panama government. Is that a sign things might be thawing?
It could be. June 18th, they agreed to pause that arbitration.
Yeah.
The hope, presumably, is that they can reach a bigger, more comprehensive resolution instead of fighting it out legally.
Makes sense.
The whole Cobre Panama situation, it really does show how that diversified portfolio helps them weather storms. And it shows their ability to navigate these really tricky geopolitical situations, finding ways to get value even when things are tough. And for you, it definitely hints at potential upside if, they can eventually get Cobre Panama running again.
Okay, let's zoom back in a bit, dig deeper into some of these specific operations around the world. Precious metals did well, GEOs up 12% overall in Q2. What were some highlights, or maybe lowlights, region by region?
Sure. South America was a bit of a mixed bag, but mostly positive signs.
Yeah.
And Apakai, for example, GEOs were down in Q2 because of shipment timing, but they expect a stronger Q3 because big deliveries happened in July and grades should be higher.
Yeah.
And Tamina delivered more silver in Q2. But they had that temporary shutdown in April after a fatality, unfortunately. They were back to full production in June, but it means Q3 deliveries will likely be lower as they catch up.
Right, understandable.
To Cantanzino, that's a newer one, it kicked in 4,500 GEOs, and importantly, the mill hit its design capacity in July, so that ramp-up looks good. Yanacocha actually did better than expected, 2,412 GEOs, partly thanks to some new leaching tech they're using.
Any less positive news from South America?
Well, Mara Rosa had a temporary plant suspension in June, just for maintenance and an operational review, but still a pause.
Okay. How about Central America and Mexico?
The main one there, Guadalupe Palmarejo, has substantially higher GEOs. That was down to just, well, higher overall mine production, and more of it coming from the specific areas covered by their stream agreement. So, good news there.
And Canada, lots happening there.
Yeah, Canada's busy. Hemlo saw significantly higher GEOs, helped by both the gold price and more production from the royalty lands. Greenstone, they did trim their 2025 guidance because the ramp-up's been a bit slower than planned.
Okay.
But big news from Achino and Island Gold that they put out a combined life of mine plan. Talking about 411,000 ounces of gold a year starting in 2026 for the first 12 years of a 20-year reserve life. That's major.
Wow, yeah.
And Valentine Gold construction's on track. First pour expected late August. First gold pour about a month after that. Then ramping up fully into early 2026. Lots of positive momentum in Canada overall.
And the U.S.? Anything major there?
Big news for the Stibnite project. It got its final key federal permit, the Clean Water Act Section 404 permit, and they also announced a huge equity raise, $474 million, to push that project forward. So Stibnite is definitely moving ahead.
Right. And quickly, the diversified assets, energy and so on.
Yeah, revenue there was slightly lower, and GEOs were down about 30%. But again, that was mostly that gold price conversion effect we talked about. U.S. energy actually saw higher volumes from the Permian Basin, which helped offset lower gas prices. Canadian energy revenue was down, though, mainly due to lower commodity prices hitting their Weyburn interest.
Okay, so drilling down like this, it really gives you a sense of the moving parts, doesn't it? For you listening, it shows how diversity works in practice. Some assets ramp up, some face temporary issues, some benefit from tech. It all feeds into the overall result and helps manage risk. It's definitely a complex picture.
Very complex, lots of factors at play.
All right, let's kind of pull it all together now. Look beyond the pure financials. Guidance, sustainability, which is huge these days, and shareholder value. First off, guidance for 2025.
They're sticking with it. Still on track to meet their 2025 GEO sales guidance, which, signals confidence from the management team.
And they've given assumptions for that, right? Like gold price.
Yeah, they've based the rest of year forecast on assumptions like $3,250 gold, $37 silver, and so on for other commodities.
Okay. Now, sustainability, ESG. This seems increasingly important for investors. How does Franco-Nevada stack up?
They actually stack up really well. They highlight their sector-leading ratings, top-rated by Sustainalytics, AA from MSCI, Prime from ISS ESG. These are top independent raters.
Yeah.
And they're committed to the World Gold Council's responsible gold mining principles.
And it's not just talk, right? You mentioned specific examples.
Exactly. They point to partnerships with the operators on the ground, things like helping Sol Gold with waste management near Cascabel, Coeur Mining building a community dome near Guadalupe, Wailu funding bursaries for First Nations students near its projects. Plus, they got recognized again by Corporate Knights as one of the best 50 corporate citizens in Canada. So, yeah, it looks like they're genuinely integrating this stuff into their business.
That really matters today. Investors want to see that companies are balancing profit with responsible practices.
Absolutely. And speaking of return for investors, dividends.
Right, the bottom line for shareholders.
They declared their regular quarterly dividend, 38 cents per share. That's actually a 5.6% increase on an annual basis. And they offer a DRIP, a dividend reinvestment plan.
Which lets you use dividends to buy more shares.
Yeah, automatically. And currently, there's a 1% discount if the shares come from Treasury. So consistent returns back to shareholders.
Okay, so pulling it all together, you've got this picture of a company hitting financial highs, but also focusing on responsible operations and steady shareholder returns. That seems like a pretty compelling combination in today's world.
It's a strong narrative, definitely.
Yeah.
Financial performance, operational responsibility, shareholder value, hitting all those notes.
So, quick recap then. Franco-Nevada's Q2. Record-breaking financials, no doubt about it, driven mainly by high gold prices, but also by smart strategic acquisitions that should fuel growth down the line.
And that portfolio diversity across assets, operators, countries, that's clearly a massive strength. It gives them resilience, lets them navigate challenges like Cobre Panama while still finding value.
Yeah, that Cobre Panama story was really something.
And connecting it all back, it just really underlines the power of that royalty and streaming model. It's built to capture commodity price upside and exploration success, but with less direct exposure to the headaches of actually running the mines.
Right. So here's something to chew on as we wrap up this deep dive. Think about this. In a world where commodity prices swing wildly and global operations are, well, complicated, what is it about this royalty and streaming model that makes it so uniquely suited to not just survive, but actually thrive?
Good question. And maybe the flip side, too. What could be its biggest challenge going forward? Something maybe we haven't seen yet.
Yeah. Food for thought. How might these ideas apply elsewhere, other resource sectors, or even just how you think about diversified investing in general?
The lessons here, they definitely go beyond just gold, beyond just Franco-Nevada. Lots to consider.
Subscribe to my channel Report Stock.